create a trading plan. So we're gonna start with, I'm gonna type everything out. Creating a trading plan. Okay, so with creating a trading plan, there's quite a few things you need to take into consideration when creating your trading plan. But one of the things you need to have is your introduction. Introduction. In your introduction, this is where you state various things like who you are. You state your name, who you who you are. You state your name, your age, what are you doing right now, all these different factors of who you are, so that when you read your trading plan, first of all, you know who you are, and second of all, you know reasoning. Your reasons for why you are trading. You could be trading to improve your life, to help your family, to give to the community, to have a foundation to build wealth. There's many different things you could say for your reasoning. And when reading your trading plan, your reasoning should be one of the first things you read. So when you go to the charts, you know, okay, I'm trading because of so, so, and so. And that gives you that motivation to drive the energy to get into the markets, analyze, make profits, and do what you need to do in order to be profitable. Another thing, nah, your reasoning should be very let me say mo- motivating. With your reasoning now, your reasoning should be very, very motivating, because in this market, trading will get very tough sometimes. And if your reasoning for doing this is not strong enough, you are going to quit at some point. So your reasoning has to be really strong to your heart, so that you are able to continue even through the tough times of trading, because trading will get tough at times. So your reasons of trading should be able to keep you going and keep you pushing and keep you disciplined and in the drive to trade. Nextly, next, confluences. When trading, you need to have your confluences. These are things that gives you signs to enter into the market. Signs to enter the market. Market. These signs have to align with each other. That They have to align with each other in order for you to make a calculated and strategic decision, in order for you to place a buy or a sell. These confluences are things that you have gathered up by yourself, because you have seen that they have worked in the past and they make you profitable. Like, let's say, a break of structure, a break of a trend line, a retest of a zone, uh, a chart pattern, a candlestick pattern, anything that you feel comfortable trading, and you have seen that when you analyze it and you see that the market does this, then that should be a confluence for you. And also, how many how many confluences do you need to see before entering the market? This is something that you need to figure out for yourself. You need to see a break of a trend line along with the retest and evening star. Do you need to see a break of supports and resistance with I don't know, whatever aligns with you and how you trade and how you analyze the market? That is things that you should put down in your confluences. So for me, I have quite a few. I have chart pen. patterns, candlestick patterns. I have like what price does as support and resistance, where price moves, price different things that I have analyzed for myself and have seen have worked for me and me alone. Okay. So another thing, sessions. This is something that many people don't really look at, and that's something I did at the beginning of my trading journey. I heard about it, I thought about it, but I didn't actually look into sessions until like later on. Sessions, we have four of them in the forex industry. It is the Sydney session, Sydney session, Tokyo, Tokyo session. It's the it's the London session, and it's the New York session. So we have four sessions. So the Sydney session aligns with pairs that go with AUD. So that's the Australian dollar. So when you're trading any pair that has the AUD in it, then you should most probably look at um, Sydney session. And the reason I'm not gonna go through all of the pairs, I'm just gonna go through the ones that I trade. So yeah, and yeah. So with the Tokyo session, I don't trade Tokyo session because none of my pairs relate really to Tokyo session. I don't trade any JPY pairs. With London session, I trade GBP USD. So when it's around London session, that's when I tap into the market to see what GBP is doing. And during the overlap of London and New York, I tap into Euro USD and GBP USD because with the pairs that I trade, Euro USD, GBP USD, and AUD USD, they move very, very similarly. So I kind of like it's almost like I'm looking at the same charts some of the some of the time. So with New York session, I analyze Euro USD, and another thing with that goes with your sessions. What times will you be trading? What times will you be trading? The thing with trading there, you don't have to trade every day 24/5 because the market's only open 5 days a week, so business days. You don't have to be trading every damn day, every second of the day. You can have designated times where your pairs align with your sessions, and you dedicate time to analyzing at those times and placing or not placing a trade at those times. This thing of you have to be on the charts every day, the whole time, or you're gonna miss out. First of all, there's something called analysis paralysis, which means you are just going to look at the charts and you're not gonna see anything, or you're just gonna see things that aren't there because you're on the charts 24. You need to learn to give your brain a break from the charts because we are not robots. We are human beings. We need a break every now and then. And also, um, you need to stop having FOMO, missing out, thinking that you're gonna miss out on trades and so on and so forth. Yes, you're gonna miss out on trades um, during your journey, but there's it's always going to create the same setup some point in time or another setup that you trade some point in time. So FOMO and analysis paralysis is things that we as traders need to make sure we do not get into because it can become a very, very dangerous thing in our trading. So pairs, the pairs that you trade. What pairs do you trade? What pairs do you trade? Also, with everything that I'm writing here, you could literally just copy these down and just fill in your what's you want to put there. You can literally just fill everything in um, from this video. So if you would like the structure of this, I will be making that available very soon. So yeah, the pairs that you trade. What pairs do you trade? And for me, I trade 6 pairs. I don't trade all six. I mainly focus on. I have three, three main fo- focus. Three main focus pairs, and that's my forex pairs: GBP USD, AUD USD, and Euro USD. But I also trade. Well, I also analyze. I don't trade them a lot. I also analyze gold, Bitcoin, and US30. US30 I just looked at for fun, honestly, and gold I traded, but not as frequently as I trade my forex pairs. And Bitcoin, I just want to see what Bitcoin is doing, honestly. So pairs is something that you should have in your trading plan. You should know what pairs you trade. Don't have this whole bunch of trade pairs. Like even on your TradingView watch list, I'm currently in a trade. On your TradingView watch list, you should have outlined what pairs you trade, so that you are not just looking at any random thing and trying to place a trade. You should have some pairs that you have in your watch list and that you study and analyze, and you know what they're gonna do. So these are my pairs. I'll also analyze DXY, because DXY is the US dollar against a basket of currencies. So when I look at DXY and I analyze it, I'm able to. It's also a confluence for me in order to make trading decisions on my forex pairs and maybe even gold. So DXY is also a confluence. I don't really trade it, it's just a confluence for me when trading my other pairs. Okay, so time frames. Time frames. What's going on? Time frames. What time frames do you trade? What time frames do you trade? Now, this aligns with what type of trader you are, which is something that will also be outlined later on, but in this video. But you need to outline what time frames do you trade on. Do you trade on the 1 minute? Do you trade on the 5 minute if you're a scalper? 5 minutes. Do you trade on the 1 hour? Do you trade on the 4 hour? 4 hour. Do you trade on the daily? This is for more um, day traders slash swing type traders. Do you trade on the weeklies? These people hold trades for long. So you need to align your time frames with who you are, the type of trader you are. Are you a scalper? Are you a swing trader? Are you a day trader? Are you a position trader? Swing traders, wait, let me start at the bottom. Scalpers use the 1 minute, the 5 minutes, everything from the 1 hour all the way to the 1 minute, or even the seconds. They trade in those time frames. From the 1 hour to about the daily, that's day traders. Day traders use those time frames. Swing traders use from the 4 hour all the way to the daily and maybe even weekly. And position traders, these people hold for a very, very long time. They analyze from the weekly to the monthly to even the yearly. So there are traders who hold trades for years, weeks, months, and yeah. So your time frames need to align. Your time frames need to align with the type of trader that you are. So your time frames need to align with who you are. You can't say you're a day trader, but you analyzing on the 5 minute time frame the whole time. You can't say you're a scalper but you're analyzing on the weekly. That makes no sense whatsoever. You need to align your time frames with the type of trader you are. Okay, which leads into the next thing. What type of trader are you? Are you a scalper? Scalper? Uh, day trader? Swing trader? Or position trader? Position trader. The type of trader you are needs to also align with your risk um, tolerance and how frequently you are able to trade. So if you have free time and you have nothing else to do and your job does not require you to be there for a long time, I suggest you become a scalper or um, a day trader. No, 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 no. Okay, so you need to figure out what type of trader are you. Are you a swing trader, scalper, day trader, and position trader? And the type of trader you are has to correspond with how comfortable are you analyzing the market and how quick do you want to make your profits in the market. Scalpers get in and out like that. Like they get in out 5 minutes, they've made their money. Day traders, we hold for a little bit longer. I'm a day trader myself. I hold for like a full day, maybe even 2 days. I hold during the day, so I don't hold my trades for more than 2 days. Swing traders hold their days for 3 days, 4 days, 5 days, maybe even up to a week. Position traders hold their positions, hold their trades for a week, 2 weeks, 3 weeks, months, years. So you need to align the type of trader you are with um how com what type of how comfortable you are with holding your trades and the risk that comes with holding certain trades for a long time or getting in and out of a trade like scalpers do. So you need to align the type of trader you are with your risk tolerance and how comfortable you are holding your trades. On the topic of risk tolerance, risk management, you need to figure out what is your risk management. How many lots are you going to use? How many lots are you going to use? What are you gonna risk per trade? What you risking per trade? What is your risk to reward? What is your risk to reward? These are the things that need to be thought about when entering into the market because risk management is something that's like many people, especially beginners, overlook when starting to trade. They think they're gonna come in the market, make $1 billion, and then dip. No, it does not work like that whatsoever. And trust me, I have learned that lesson a very hard way. You need to align everything. Trading is all about alignment. Everything has to align with each other in order for it to work from the basis of who you are in this market all the way to what you are risking and how you trade and your confluences and the style you trade. Everything has to align with each other. And if even if you like take price action and add in ICT and add in SMC and add in some other style you learned from somebody else, everything about you needs to align with each other. It can't be disorganized or everything's gonna be effed up. You're not gonna make any profits. You're gonna feel like giving up. You're going to be part of the people who came into this market thinking they're gonna make so much money, but then they found out how hard trading can be, and then they dip. If everything is not going, if everything is not aligned with each other, then you are not going to see any profits. And I think with trading is analyzing the markets. Making money is a byproduct of that. Making the right decisions, which you're not always going to make, by the way. Analyzing the market and predicting price movements for future price movements is what you are doing. Money is the byproduct of that. So risking all of your money because you thought GBP USD was gonna go up and then it went down because you had some crazy idea you're gonna make 10,000 rands, dollars, whatever currency you are in a day when you're just starting. That is very, very ridiculous. It can happen. You can make 10,000 in a day, but if you're just starting and you don't have proper risk management, your psychology is not right, you don't even know technicals, you don't know anything, you are not going to succeed and go very far in this market. Another thing with risk management, what are you risking per trade? When you are trading, how much of your account are you risking when placing that trade? And that how much you're risking per trade has to align with your lot size. So let's say you want to risk a certain percentage, so you have to align the lot. So your lot is how much of the currency are you buying or selling. So how much of that currency are you buying or selling has to align with how much you potentially might lose if you are wrong. So let's say you wanna buy GBP USD with a 0.1 lot, so that's like $1. So that's the pip value. So that's $1. That has to align with your risk. So if you lose that trade, then does it align with how much you are willing to lose per trade? And if it does not, do not take that trade or cut down on your lot size. So risk management is something that is very, very crucial when trading. It is very, very crucial when trading. Along with risk management, journaling. This is something that a lot of traders don't really take seriously, and I used to be one of them. But when you keep walking in your trading journey, you start to see that journaling is something that is very, very crucial along with your risk management, because journaling allows you to write down everything you felt during the trade, the setup, the strategy you used, the confluences you saw, the time frames you did it on, the lot sizes you had when you opened and closed the trade, everything, and then you go back and you see what went wrong. What did you do? And then that is you are able to make better decisions because you wrote down what you did in the past and what you did wrong. And you are also able, when you do win a trade, you're able to see that you are making progress from trade. You're not just making money and not knowing how much you're making or what did you do right in order to win that trade. So journaling is something that um, is very needed when trading, and I use Notion to journal my trades. You could use a notebook, you could use a different software. Just find something. You can even use a Microsoft Excel spreadsheet. You just need to find something that suits you to journal your trades in order for you to keep up with what you are doing and your your growth and your progress in this industry and in this market. Okay, now moving on, entries. This, sorry guys, I might be a little sick. This is where you outline. This is where you outline what's the market has to do or what you have to see before Okay, so this is entries. This is where you outline what the market has to do or what you have to see before entering the trade. And your entries can be a vast variety of different things. You don't have to restrict yourself to what you think. Let me rephrase that. You don't have to restrict yourself to having only five entry points. You can have as many as you feel comfortable trading with. So I have a few. Um, I will enter the trade in the event of the market creating chart patterns, candlestick patterns, but those go along with other confluences. Like, what is it doing? Is it making that at key levels? Is it doing that at trend lines? What is the market doing in order for me to enter? Is it consolidating? That is it breaking the consolidate? That can be an entry point for myself. Is it breaking trend line? Is it breaking a support and resistance? Is it retesting? What is the market doing in order for it to tell me this is what I'm doing? This is the potential movement. Enter. Confluences give us signs to enter. Candlesticks tell us a story. You need to read what the market is telling you in order for you to pinpoint a possible entry in order for you to enter the trade. So your entries have to align with your confluences and align with your time frames and align with the strategies and the type of trading that you do. Are you an SMC trader? Are you an ICT trader? Are you a smart money concept trader? You can't tell me that you see a what's this thing called now? A change of character along with a BOS with a Fibonacci and then an FVG, but you say a price action trader. Come on, buddy. Come on, buddy. Your entries have to align with the type of trader you are. You can't say you're one thing and then trade another way. Everything in trading has to align with each other. You cannot be this organized in this market along with your charts. Let me take you to one of my charts. This is my Euro USD chart right now. It's organized. My levels are where I place them at these key areas where price has moved, stopped, and retraced, etc. And everything is organized, everything aligns with each other. It's clean, elegant, it is not messy. I have seen I'm yapping a lot. I have seen charts that have been clustered with indicators and lines and drawings and all of this, and that is not a very what's what I'm looking for? A very organized way of trading. So your entry points need to align with your confluences, and that needs to align with your strategy. Next, exit points. What is going to make you exit the trade? What will make you exit, exit the trade? This is something you have to think about. Like, what is the market doing that tells me to get out? Is it about to hit my stop loss? And the thing with that, you need to think clearly. Is the market about to hit my stop loss, or is it just in some drawdown, or is it just giving me a retracement? Don't exit when the market is just giving you a little bit of drawdown. Now you've exited the trade and the market went exactly how you predicted it. When I say hitting my stop loss, I mean price is literally hitting your stop loss. So let's come here. So let's say around this area here, I thought this was going to sell. I thought the market was gonna do a double top here, a double top here. So then I entered for a sell here. So as I enter for the sell, it pushes down just a bit. Okay, I decide to hold. the market starts moving up, 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 it's clearly about to hit my stop loss. Some people would have held and gotten stopped out. You need to analyze the market, adjust to what it's doing. When you see that you're about to get stopped out, close the trade, um, reduce your losses, adjust, reanalyze, and get in for the buy. Like, it's really not so difficult to do that. And with your exits, another thing that you could put down, if you do not feel confident in a trade, okay, now listen to me very carefully. If you do not feel confident in a trade, get out. If you do not follow your plan, if you do not follow your strategy, if your confluences are not aligned, if you do not analyze the market properly, if your emotions are all over the place, get out of the trade. I don't care if you're in profits, I don't care if it's looking good, get out of the trade. You are most likely going to lose money because you did not follow your plan, you did not follow your strategy, you did not feel confident. And if you need to feel confident in this market, if you enter a trade, because then if you do not feel confident, you're gonna be checking the trade up and down, up and down, up and down. You're not gonna let it run. You're not gonna let the market move. Even if you are right and you still don't feel confident in the trade, get out because that was not according to your plan. That was not according to your strategy. And if you do not follow your plan, you do not follow your strategy, everything about that trade is wrong. If your risk management is not right, if your emotions are not in check, if you are not doing what you used to do to become profitable, get out of that trade. That trade is wrong. You made a mistake. So that's something you could also put in for your exit. If your emotions are not in check, if you did not follow your plan, if you did not follow your strategy, if you did not do, if you did not follow the guidelines and the rules that you set out for yourself, get out of the trade. Go back, journal it, revise, refresh, come back the next day, and try again. Okay, this is about the ending, close to the ending of the strategy, your conclusion. Now, this is where you outline some of the things that you initially put in your strategy, like the type of trader you are, type of trader, some of the reasons, some of some of the reasons you had in the beginning, some of the reasons. Now, when writing out your conclusion, it's like a story to yourself in a way. It's like a letter to yourself. You say, it's like mine says, I, Chuku, chosen trader, my surname and my middle name, am a technical trader, and I trade on the 4 hour, 1 hour, and daily. I analyze the market in so and so ways. I use um, support and resistance. I watch for consolidation. I look at key levels. You basically summarize your entire trading plan in a few sentences so that you don't have to always go back and read this whole thing, because sometimes in trading you're not trying to read this whole thing. Maybe if you like you're studying, or you're studying your strategy, you're trying to improve your trading plan, that's where you're going to read on the whole thing. But when you're trying to read this every day, you just want to have a summary of everything. So you say, I enter on the 1 hour, and my confirmations are on the 4 hour, on the daily. I look at all my time frames to see if they all align with each other. Things like that. You just have to summarize your summarize your trade. Summarize your trading plan into a few sentences as a letter to yourself. So you basically read that every day so that when you come into the market, you know who you are, you know why you're doing this, you know what are you looking for when analyzing, you know what your risk management is. All of these are already in your head because you have summarized it in a short, um, sweet letter to yourself so that you don't have to go back and read this whole thing. Because if you're trying to read your trading plan every day before trading the market, you're gonna get bored at some point. You're not trying to, especially like, I don't know, like you're not trying to read this whole thing, this whole document every day. You just want to have something short to remind you of who you are, why you're doing this, what are the main things that you're looking for. And when I say like, write, summarize what you're looking for, I mean like short little things like I trade support and resistance, I trade consolidation, I look for trend breaks, I look for key levels, I small little things, but they're the main things that you look for when analyzing the market. It doesn't have to be a whole essay, it just needs to be a summary. And what are you also aspiring to be through the market? So, like for me, I'm not trying to trade and that's it. I'm trying to use trading as a stepping stone to go into other different areas of financial income and wealth generation in order for me to create a better life for myself and the people around me. I'm not trying to use trading and trading alone. So trading is a foundation, but the beauty about it is that I can do it any point in my life because it's a skill that nobody can take away from me. So that's something you can also outline in your summary. Now, this is this next part, declarations. 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 What declarations are you going to make to yourself in order for you to stay disciplined, stay confident, stay in check, and stay in tune with your trading plan and your trading strategy and how you trade? So things like I will not overtrade, I will not revenge trade, I will not go over my risk management, I will not um, trade after losing a certain amount of trades or after losing a certain amount of money. These are the type of things you need to think about when writing out your trading plan. So the thing is that as traders, sometimes we forget, nah, sometimes you go astray a bit from how we usually trade. So we might risk a little bit more. We might lose money and then want to immediately get it back. These are the type of things that you should think about when writing out your trading plan. And you also need to have self awareness and think to yourself, what do I do that makes me lose money that I need to remind myself not to do it before I enter the market. So let's say you always try revenge trade whenever you lose money. That is something you need to tell yourself, okay, when I lose money today, I'm not going to immediately try and get it back. Or I'm not going to take more than the market is giving me. Or I'm not going to, I don't know, like be greedy and trade when the market has already given me my daily profit target, but now I want more because I'm being greedy. These are the type of things you need to think about in your declarations when writing out your trading plan. And your declarations can be as long as you want them to be. It's not only I will not do, I will not do, I will not do. You can also add things like my weekly goal is so and so amount, my daily goal is so and so amount. I will, it sounds very negative, but like I will not trade if my emotions are not in check, if I feel this way, if I have this attitude. These are the type of things we need to think about when creating our trading plan. So, what do you need to remind yourself of before going into the market? These are the type of things we need to think about. Okay, Lastly, because this I don't want to make the video long, but like it's quite a long video. What is your trading strategy? Trading strategy. Strategy. This is where you outline the entirety of your trading style, like your confluences, your risk management. What do you look for in the market? How do you analyze the market? How do you draw whatever you draw on the market? What time frames you're trading on? What news affects your pairs? Everything that you have analyzed, that you everything about your analysis and your trading style and your trading mentality goes into your trading strategy. This is You have to outline everything into a formatted, detailed, and structured way that you can read, memorize, and come back to. And just this is where you just write everything down about how you trade, and how you trade is for you and you alone. So when trading is mostly about you and nobody else. And I am currently winning this trade. Nice. So in that part, you need to outline your trading strategy. Like for me, this this was a trend line, a downtrend, a bearish downtrend, and so I put my Fibonacci from here to it was at this point here. Let me move this here to this point because that was the lowest point, and then I waited for price to retest this trend line, and price retested all the way until the 78.6 area, and now it's starting to push down. But I only entered the trade around here because I needed two candlesticks to close to cover um to cover so that I can see that it is going into that direction. So that's why my thing is here, because I entered at around here. So now I am currently in a bit of profits on my trade. So my profit target is this 0.00 zone that it was the lowest point that it went to before. So then after that, I'll be waiting for another retrace. Let me actually write this. Draw this out. I'm waiting for it to come here, retrace there. So after it closes here, I'll wait for it to retrace there, and then when it retraces here, I'll draw my Fibonacci from here to here, wait for it to finish its retrace, and then possibly enter the trade for it to go lower. So that's part of my trading strategy. My trading strategy That's something in my trading strategy. I trade continuations of trends, but that's not the only thing I trade. This is one of the things I trade. So like also support and resistance, chart patterns, candlestick patterns. These are many different things that I look for and I analyze when looking at the market, and it's all outlined in my trading plan and my trading strategy. So guys, enough of me talking. If you like the video, like, share, comment, subscribe, and I really hope this added to your understanding of something you needed to know about, or something you didn't understand, or something you needed help with. If you would like further information on anything, or you need me to explain something or make a video on something, please go into the link in my description, and it's actually a link to my socials. Um, I prefer you DM me on Instagram and just ask me to make a video on anything that you don't understand. And yeah, so without further ado, it's your boy Chosen Trader. I'll see you in the next video. Stay blessed. Bye.